Well, welcome to this week's Cattle Call as we take a look at some comprehensives on what's happening with the data on the cattle industry. If you remember, if we rewind just a month ago, we were talking about some good fundamentals and looking at what was going to happen in these April contracts. So we're going to talk more about that with Brad, as he should be smiling because what he talked about is happening right now. So how does the data that is affect the trade, especially when we look at this cattle industry? We'll talk cash, and of course, most importantly, we're getting through the Easter holiday, which means it's time for grilling season. As Brad Kooima does join us here, he's with Kooima and Varlick out of Sioux Center, Iowa. So let's talk about this comprehensive data that's coming from the cattle industry and how it's different than the data you're getting from the USDA.
Well, yeah, thanks for having me on. I should qualify one thing you said, about, we talked about this, right? Well, there's an old saying that people remind me of, even a blind squirrel will find a acorn now and then, right? So if you say the same thing enough times, maybe you'll finally be right. But what you're referring to here, and this doesn't do it justice, but I mean, this is the jagged line is what you should care about. But I'll tell you what these little graphs are talking about, Susan. So one of the most people that know that I've been pretty engaged with price discovery, transparency issues like that within my role with ICA and a broader role with NCBA. And I personally have a strong opinion that I think the Fisher-Grassley bill is just what the industry needs. It's the best thing we've ever been able to get this close. And so part of that bill speaks about transparency. One of the pieces that Iowa cattlemen brought 2.5 years ago to the NCBA was a quest to have the USDA impelled or made to provide these weights on a more timely basis. The grade and the weight, the data that we get is 13 days old by the time we get it. 13 days, it's ridiculous. The hogs kill 4 times as many hogs a day, and they have all the information the following morning by 11 o'clock. There's no reason that this cannot be done quicker. And the reason I bring it up right now is because, a couple of weeks ago, it was very noticeable where some of the packers really tried to get out in front of the market. And all of a sudden we're bidding, pretty good on a Monday, for instance, a couple of times, trying to buy a month's worth of cattle. And you kind of go like, I wonder why? Well, Brad being the skeptic, right? I thought, I wonder if our weights aren't falling apart, that we're getting super current. And we just don't know it yet.
Right.
Packer knows it. And what about our grade? Well, so anyway, this comprehensive data comes from LMR, comes through USDA, and this is only a week old instead of 2 weeks old, but it comes out on Tuesday afternoons. But what it's showing is that our average weights, our dressed weights are just plunging the last 2 weeks. And along with that, the grade is coming apart too. Well, you're enough of a cattle person to know that to have grade, you got to have days on feed, right? Corn cost you $7, $20, $50, $8 in the bunk in the South. These guys are selling cattle as quick as they can get a bid. So as that's taking the grade and the weight off, that's something that maybe in the very short term feels a little negative because guys are giving up to a little easier than they would, but it's not bearish. It's friendly down the road because of the less beef production that you end up with ultimately. So I just felt a little vindicated and a little torqued, that we still got to wait for this data to come out late. But anyway, so there's my little rant. Sorry, I'll get over it.
No, you're fine. As you look at all that information, all that data that's coming to you, how do you see that as a trade affecting factor then?
Well, I'm a numbers nerd. There's not very many people anymore that I think that try to work real hard at the fundamentals because it is hard work. And there are plenty of days also where all that fundamental stuff doesn't seem like it makes a lick of difference on how the market trades because that's the day the funds decided they're going to sell it or they're going to roll it or they're going to whatever. And of course you're talking about a fund community and algorithms and stuff that are built not on what average weights are. I'll guarantee you they are built on when the blue line crosses the red line and where moving averages are and all this other stuff. So, to me, there's two components, fundamental and technical analysis. And I still want to come back to the point where I think the fundamentals at the end of the day will make a difference. But so what does it mean to the trade? I still think, like we've talked about, and you said that in the intro, that we had this slot here where we had moved the yearlings forward because of good weather, great performance, high price feed. And we created a bigger gap between the supply of the yearling type steer and the calf. Okay, so now the next thing is to wait to see once we get these calves fat enough that somebody will want to buy them. But I think you got a spot here of I don't know, until the middle of May or so, where I think we've got pretty tight supply, and we got a packer that's making all kinds of money, and I think he wants to kill. And so that ought to sound like the right ingredients for a little stronger cash cattle market.
So let's talk about the high feed costs that are out there right now. Lack of feed stuff. Hay is at a premium right now. And you and I've had this conversation a couple different times. That means a lot of cows and maybe even some heifers now are going to be coming to market.
You don't want to talk number nerd. We could talk a long time about that. The number of heifers going to slaughter, fed heifers, is astonishing. I mean, I have to look back of 20 years of data to find a time period where it's similar. It is unusually incredibly high. Give you some perspective. It's more than the last several weeks. It's been 50, 60,000 more heifers per week than normal. And of course, the other part of that female slaughter would be the cow slaughter, which has been huge. We talked about last year's cow slaughter was the second biggest in 20 years. We talked about that on your show too. So what's the component? Well, the component is something that's happening at this very moment to the north of me. I hope. Now, I know they would rather have rain. I know they hate the snow and it's calving, and I don't want to make light of that. It's a bad deal. I get it. But when I talk to them, and I do, they go, well, at least it's moisture, and, some of these guys are telling me it's the first time they've had a real big system in maybe more than 2 years. I'm talking about eastern Montana and the Dakotas, particularly North Dakota. We got to keep an eye on that. If they get enough moisture, get their ponds backfill, and I know one robin doesn't make it spring, and I know one snowstorm doesn't mean they're going to have grass, but okay, if we start to see that component where we slow down, first thing what would happen, we would slow down or eliminate the cow kill, which would help, right? I mean, for the overall fed supply. And then if they decide by come this fall, they're going like, it's about time we start to hold a few heifers back and replace all these cows we had to get rid of. Well, that's the cycle of the market that's really, truly supply side friendly, so that's out there, right? Year and a half. Stay posted. Hopefully I'm around long enough we can watch this next bull market come there the next couple of years.
Well, as we wrap up, let's talk quickly about the strength real fast in this cash market.
Okay. I thought that was what finally drug this thing off its rear end this week. Finally, the north, the south, no resolve whatsoever down there in the south. But cattle traded today, my own, okay, as high as 145 picked up. And so, dragging along this discounted futures, which is probably going to stay that way, but still, pulling along the futures and maybe giving, hopefully, these guys in the south just a little bit of a backbone where they're going to ask a little more than 138 finally. So we'll see. They haven't hardly traded yet today. I know a few poor quality cattle traded at 139, but I'm hoping by the time they do trade, that we're someplace at 140 or north of that.
All right. Well, that's been this week's Cattle Call. Thanks for joining us, Brad.
You are welcome. Have a great Easter, a blessed one.
You as well. And just a reminder, folks, commodity futures and options involve a substantial risk of loss, not suitable to all investors. That's been the Cattle Call right here on the Rural Radio Network.